What is going on, good people? I want to first off say happy New Year. We made it into 2023. Can you believe it? It has been a long, well, it's not been a long year, but it has actually flown by pretty quick. There's just been a lot going on, obviously, getting back to normal, and things have been definitely changing in the real estate market. So I figured, what better way to start off the year than to send you and talk to you guys about what is actually going on in the real estate market. There's a lot of headlines out there, and I get questions every day about what is actually going on. What's really happening? Are we seeing a crash? Are prices really just falling? Has the bottom fallen out of the real estate market? Has the bubble popped, quote unquote? Which, we're going to talk about all that stuff here. So, first off, number one, let's talk about interest rates. Okay. Interest rates are something that will forever fluctuate. When we start to talk about inflationary periods, times where the R word is being thrown about, we know what that R word is. What actually tends to happen is that interest rates tend to fall. Now, yes, over the last few months, interest rates have more than doubled since the beginning of the year. However, those interest rates will start to fall throughout the year based on the fact that the Fed announced that they weren't going to be making any more major adjustments to the interest rates throughout the rest of this year. But we'll see. Everybody, they always change their mind, but we'll see. I believe the next meeting is at the end of this month for them to determine what they're going to be doing with the interest rate. But the interest rate has fallen from 7.5% down to 6.5% within the last month. So we're actually seeing that come down. And because of that, we're seeing a little bit of additional buyer activity out in the market. Now, the last 3 months have been something of an anomaly. I mean, we can't really call what home values are really doing, but we are seeing prices fall a little bit. And I have this chart here to show you what the average price has been doing. Each of these points is a rolling 3 months, but I want to just walk you through what's been going on through the year because as you can see, we're still up 6.5% in the average sales price. So starting last January, this time, we were actually at $360,036. That was the average sales price in the Twin Cities. Now it's gone up and up and up. We've seen some periods where it's gone up steeply. We see some periods where it's just been kind of hovering. And then, of course, it went down a little bit and then up again. This was the craziest part here. This through the spring, February through June. That's what we tend to see. Now, what we can talk about is what started happening after June. So this is when we started seeing those interest rates start to fluctuate a little bit more. So June, July, August, we started seeing the threat of interest rates starting to rise. And what happened was we saw the prices start to slowly decrease. And they are still slowly decreasing. However, we're still 6.5% above where we were in January of 2021. So when you're looking at that and where we're at as of December 2022, January is not. We're not looking. We're obviously in 2023 now, so we're not looking through January. We're not even nearly through January. Thank goodness this year isn't flying by yet. But you can see that we're still looking at a healthy market. And what a healthy market is becoming more balanced, right? If you take a look at the month supply demand, the month supply is moving up to near normal levels, right? We're at about 2 months of inventory, whereas throughout the entire crazy period of COVID buyers is what they call them, and that crazy appreciation that we saw in houses, the average time on market was 1 month or less. Can you believe that? So now we're getting up to about 2 months. Now what you can see is that if you're looking to purchase a home, you have more options. You have more time to think and make a smart decision on the home that you're buying. There's less competition out there, and we're not seeing the crazy bidding wars that we saw before, which means that as prices go down and level out, that's going to be a true level price and a true accurate reading of what your home is actually worth. Days on market, as you can expect, have gone up. We saw houses selling within hours just 6 months ago, right? And that's literal. Like we were seeing offers in on houses within hours of putting them on the market. Now we're seeing the average days on market at 41. That's normal. Normally, typically, it takes 60 days for a house to sell. So we're getting up to that normal period, the normal number of days on the market, and that's actually increased up to 30, about 37%. Closed sales, if you can imagine, they have gone down. But this is a mix of two things, right? Typically, we don't see as many buyers in the wintertime. And obviously, we're coming up in January. I'm looking out my window now, and there's a snowstorm. There's just not that many buyers that want to buy a house and move into a home in the wintertime. So, two things are impacting that. One, of course, interest rates, there's less buyers out there. So, there were less closed sales. There are houses that are coming off the market now because those sellers were extremely optimistic about what the market was doing. And then they saw the change all of a sudden, and now they're pulling their homes from the market because they're not wanting to um, adjust their prices down. Now, if they still want to sell and they want to come back on, they'll have to adjust those prices and they'll have to match the market. However, right now that just isn't the case. Um, the other thing, obviously, like I said, weather, time of year. We always see a slowdown during this period. So closed sales is always going to go down a little bit more. So we're down about 37%. Now, the additional, usually we see about a 15 to 20% drop here. The additional percentage points there are because of what's going on in the market. Now, that's just the truth. All right. The percent of the original sales price. Now, this is a good indication of how strong the market really is, because if you're putting your home on the market and you're getting close to 100% of what your asking price is, that's still a good solid market. There's still some good buyers out there. That means your house is probably priced just right for the market. Now, in the last 6 months, year, 2 years, we actually saw prices that were coming in 105%, 110%, 120% of what the asking price was. That's not normal. And unfortunately, people got used to that. What's more normal is something like this. We're looking at 95 to 97% is typically the normal fluctuation from the original ask price to what the actual home sold for. And right now we're looking at 97.4%. Funny thing is, that's down 2.5%, which means that the average over the last year has been that people have been getting 100% or more of their asking price. And it just that happens. Yes, it does happen. However, it doesn't happen on every single home that's out there, and that seemed to be the case over the last couple of years. So listen, those are the top metrics that I like to share when it comes down to a market update. If you have any questions or want to know the specific value of your home, do me a favor. Go ahead and click the link down below, fill out the form, and I can get that to you within 24 hours. If there's any other questions that you have and you need to reach out, you can click any other of the links below to email me, text me, or call me. I'm always happy to help. I appreciate you guys.